Hi there, traders. This is Brad Gilbert with today's top trade opportunities. Now, just coming on the back of the Fed, okay, they've pushed back their unlikely to cut rates in March. Doesn't change the picture for the dollar too much, but short term, dollar strength, right? And we've seen that across the board. And I'm just sort of going through this because you just need to understand what's going on, right? Euro a little bit lower. Now, today we've got the Bank of England, right? So sterling hasn't really kicked in yet. Aussie and Kiwi still on their knees. And the dollar, well, you can see the reaction here across the board was a little bit jagged, right? The little bit down, a little bit up. That's what happens on these big meetings. It's hard to work out what's going on. But if you follow the trail, we can find some gold there. And that's what happened yesterday. Well done, Joshua. 30K out of Aussie yen, right? Weak Aussie CPI numbers. Time that in with a slightly hawkish Fed. You know what? Put those together, you get a weaker Aussie yen, and a good job there. Now, let's just have a look at what we've got today. Don't rest on your laurels. Now, there's a few bits and pieces coming out of Europe here. Yeah, no big deal there. Inflation and unemployment out of the Eurozone is key, mainly inflation, right? I want to see what's going on the inflation front because the central banks are trying to play catch up now. So if you're looking at Euro, well, you've got a chance here for some fresh momentum. Now, the key to it is the whole trade day, and it's like the Aussie CPI and the Fed yesterday, there was a good, like 8, 10, 14 hours or something in between those two events. But you wait for the second one and you get the answer. Here, we could have Eurozone inflation numbers. We are going to have another tricky event here with the Bank of England. Now, no change in rates expected. I think everything like across the globe is shrinking. So to me, there could be a surprise that if there's no surprise, I'm not saying they're going to cut, but if there's a surprise in their statement or their press conference where they come out and say, you know what, things are looking pretty bad here and we better get moving. And that's where you'll get the big kicker, right? So what do you, and this isn't rocket science by any stretch of the imagination. What I'd be doing is connecting the dots, euro and sterling. What does that give us? Well, euro sterling, right? You've got to be having a look at this because it's not often we have inflation numbers and a central bank announcement in the Eurozone at the same time. And just looking at euro sterling, this is where it has a big chance to sort of disconnect from euro and sterling, which basically against the dollar, they correlate like 90, 95% of the time. This is where they will decouple. Now, understand what's happening in the market. Euro sterling has been drifting lower, right? Sterling has been holding up there quite well. The data was good, but now I think it's turning. The weak euro data has already been factored in. So it's going to be a little bit tricky. You look on the daily charts, it's broken down. And right at the moment, we've got a key level here. It just doesn't want to go yet, right? And if I just blow that up, just to give you a better look at that, I think this could be ideally our sort of entry level around here. If anything, below this other low would be good. But you can see it's working here. Now, why isn't it going? Well, we need to see what the euro inflation data is. That'll be the first precursor to a move. And then secondly, the Bank of England, right? So that's where you got to connect these dots. Now, the Bank of England, not as clear. This is like almost picture or mirror image of yesterday, right? Aussie inflation numbers came out. Then we had the Fed. But the good thing is there's only a 2-hour gap here between the two releases. So inflation will give us a bit of insight into what's happening in the Eurozone. That could send euro against the dollar down or up. And euro sterling, well, you might see a little bit of a reshuffle on those inflation numbers if there's significant variance here. Now, then it comes down to the Bank of England. Like the Fed, there's going to be volatility in sterling and sterling crosses. We want to hear and we want the market to understand what the overriding theme is from sterling. If you're trading it on the release, you're not going to really know. It takes a couple of minutes for the headlines to come out, for them to say, you know what, we're not cutting rates. We're going to push it back to like March or April or June, whatever it might be. If they start to talk about, you know what, things aren't looking great, we're going to have to move a bit quicker because inflation's falling, well, then that's when sterling will fall and euro will rally, right? So technically, to me, the easiest trade, I always like to go with the trend is the easiest trade, right? The trend is down. So to me, weak Eurozone inflation numbers and the Bank of England standing put or standing still saying, you know what, nothing to see here at the moment. We need to see more data. That would be quite a little bit of like a little boost of hawkishness and send euro sterling down. Okay, so that's what I'm thinking. It's just a matter of connecting the dots. And when I come back to the global markets, and if I'm looking at euro and sterling against the dollar, it's sort of two different little pitches here, right? Like sterling, no one really wants to attack it at this point because we haven't been getting much direction from the central bank, so it's drifting sideways. And that's why euro sterling is lower. It's not like sterling's rallying here and setting the house on fire. It's just that it's not going anywhere, whereas the Eurozone is just lagging on all parts, right? That last 150 points down here in the last sort of week and a half, 2 weeks, that's where the euro sterling move has come from. So when we look at today's data, you're thinking, well, okay, we could see a correction here. And you might see some moves in euro and sterling against the dollar, right? But primarily, if you want to hit the raw nerve in the market, come back and have a look at euro sterling and try and weigh up what's going there. So like we're not going to get strong inflation numbers out of the Eurozone, right? So there's no real chance of euro going up. And that's why euro sterling is already going down. The big thing we're waiting for is the Bank of England to tell us that they're not cutting rates anytime soon. Euro sterling goes for another run. Now, on the other side of that, if they did come out and say we're going to cut soon, well, euro sterling will correct, right? It's as simple as that, right? But you need to wait to see and hear what the central bank has to say. And that's the key to getting all this stuff right. All right, guys, as I said, great job there by Joshua to take some cash out of the market, but it just comes down to being patient, right? Wait for the setup, right? Wait for these numbers to drop. It's not a matter of just running in on the Eurozone inflation numbers. If you're trading euro sterling, you could, but it's a short-term trade because the big kicker will be the UK employment numbers. And last but not least, don't override it, but we will have some more US numbers. The ISM manufacturing number, a very well-respected number. Keep an eye on that as you go through the day because that could give the dollar a little bit more of a tweak before the US non-farm payrolls Friday. All right, guys, that's it from me. All the best. Cheerio.